Something big is happening in the energy world right now. Not a shortage, not a crisis, something quieter, but probably more important. Oil companies are buying each other and they're spending tens of billions of dollars doing it. Let me explain why. In the next few minutes, you're going to understand what these massive deals mean. Why would companies spend $7 billion on another oil company? Who's buying? What are they buying? And here's the part that affects you, why this matters to your energy bill. I'm Mark Roach. I've worked in oil and gas for 30 years, drilling deals, buying companies, selling assets, training people across every continent. This is FutureWise Energy. We explain energy and we try to use plain language. Let me start with numbers. Last year, 2025, companies spent $65 billion buying and selling oil and gas assets. Well, that's up from slower years before, and it's happening faster and faster now. And in just the last 3 months, or the last 3 months of last year, 2025, we saw almost $24 billion in deals announced. Right now, in January 2026, we're watching some of the biggest deals of the century happen in real time. Think about this. Japan's Mitsubishi just spent $7.5 billion to buy an American natural gas company called Atheon Energy. That's real money. That's urgent. At the same time, Chevron and a private equity group called Quantum are trying to spend $22 billion to buy a Russian oil company, Lukoil's international assets. $22 billion. That's not chump change. That's a signal that something important is shifting. Well, here's the real question everyone asks. Why spend billions on another company when you could invest that money anywhere? Well, the answer has three parts. First, natural gas is becoming valuable again. Think back a few years. Natural gas was cheap. Drillers couldn't give it away. But now natural gas prices are rising. Why? Well, America's exporting it. We're shipping natural gas overseas to countries like Japan and Europe that desperately need it. We call this LNG, liquefied natural gas, which is basically natural gas supercooled into a liquid so it can travel on ships. That means American companies that own natural gas fields are suddenly worth a lot more. So international buyers, well, especially companies from Asia, they're rushing to buy American natural gas assets before prices go even higher. Mitsubishi didn't spend $7.5 billion on a whim. They did it because they know natural gas demand is going to go up, and they want to lock in supply. The second reason, oil prices are down. Right now, oil is trading around $60, $65 a barrel. That's not terrible, but it's not great if you're in the upstream oil business in the United States. Lower prices mean smaller companies, and companies with high cost operations are struggling, kind of like American farmers. They need cash, so they sell assets to bigger and stronger companies that can afford to hold them and wait for better prices. The third reason, well, this is important. Debt. Some big oil companies borrowed a lot of money from mergers and acquisitions in the past. Now they need to pay that back. So they're selling non-core assets. Think of it like a person who bought a house, took on debt, and now needs to sell their second property to pay down the mortgage. Well, that's what's happening in oil and gas. So what are they buying? Mostly natural gas fields. Not oil, but gas. You might think oil is where all the money is, but right now the hot asset is natural gas, especially in places like the Haynesville Shale in Louisiana and Texas. That's where you find the best, most productive natural gas in America. Companies are also buying deep water operations in the Gulf of America or the Gulf of Mexico and Appalachian shale gas in states like Ohio and Pennsylvania. These aren't as sexy as these other investments, but they're going to make headlines. Maybe not on CNN, but they do produce a steady stream of reliable natural gas. And the world buyers are willing to pay billions. So there's a strategic, a geographic angle here. Some foreign companies, especially from Asia and the Middle East, well, they're buying specifically to secure long-term supply. Japan needs natural gas. South Korea also needs it. These countries don't have their own oil and gas, so they're investing in American assets to guarantee that they can buy our gas in 10, 15, and 20 years from now. So let me break down one deal specifically, and so this makes sense to you. Mitsubishi, the giant Japanese company, they just bought Aethon Energy for $7.5 billion. Aethon owns natural gas fields in Texas and Louisiana. Today, those fields produce about 2.1 billion cubic feet of natural gas per day. So let me translate that. That's roughly enough natural gas to power electricity generation for about 20 million people. That's a real business. That's stable cash flow. That's exactly what Mitsubishi wants. They're betting that natural gas prices will stay high, that demand from electricity generation and LNG exports will keep growing, and that locking in supply today is smart. And here's the thing viewers don't always understand. This isn't speculation. Mitsubishi is not gambling. They're making a calculated business decision based on demand that they can already see happening. LNG exports from America are ramping up. Power companies are burning more gas to generate electricity. Data centers powered by artificial intelligence need electricity, which increasingly comes from natural gas plants. That's why Mitsubishi is willing to spend $7.5 billion. Now, here's the part that affects you directly. What does this mean for your energy bill? Well, the short answer is that these deals actually help keep your money in your pocket and keep costs stable. When international companies buy American natural gas assets, it creates competition for those assets, and competition drives fair pricing. When Mitsubishi buys Aethon, they're not buying it to hoard it, they're buying it to produce it and sell it, or sell that gas, and that keeps the supply flowing. Second, these deals strengthen the American energy market, more capital flowing in, more infrastructure investment, more job creation in places like Texas, Louisiana, Oklahoma, where these fields are located. That's real economic activity. Third, it gives U.S. leverage globally. When Japanese companies need American natural gas, they negotiate with American companies. That strengthens America's positions in global energy. You don't see that in the headlines, but it's real. What these deals don't do, well, they don't cause gas prices at the pump to spike. These are natural gas deals, not crude oil deals. Natural gas and crude oil are totally different markets. If we were talking about someone buying the Permian, America's biggest oil field, well then yes, you might see pump prices shift. But natural gas is mostly used for electricity generation and heating. It affects your electric bill more than your gas tank. So here's what to remember. The deal boom we're seeing is telling you something important. It tells you the energy world is shifting. Natural gas is becoming valuable again. Electricity demand is surging. International buyers are willing to spend serious money to secure long-term supply. These aren't desperate deals, they're strategic deals. Companies are sitting on natural gas reserves when they're in a position of strength right now, and international buyers know it. The next time you see a headline about a massive oil and gas merger, maybe now you can decode it. You can ask yourself, what kind of asset are they buying? Natural gas or oil? Is it in a hot zone like the Haynesville or Appalachia? Is the buyer international or domestic? And what does that tell you about the energy world and where is it heading? Well, that's how you make sense of energy news instead of just being confused by the headlines. I'm Mark Roach, and this is FutureWise Energy.